It's a one of the few that can claim to be 40 years plus old. And what that translates into is a history of quality teaching, contribution to the society, towards shaping careers, um, in all domains, all spheres of corporate activity, and even in the non-corporate, not for profit business organizations, not for profit organizations. um, so that is a achievement that we are very proud of shaping careers, helping people not just build careers but their lives. And and you have uh, all kind of interesting courses to study during your full-time program. That includes courses in marketing, uh, HR, finance, information technology, analytics, all kind of wonderful courses. What that would entail, what is the common thread in all those courses? Perhaps could be decision making. Right now, somebody might argue we've been making decisions, so what's so new about it, and what exactly is this um, session all about? And and what I will try to demystify or maybe make you more curious about is that there's a little bit of scientific rigor, there's a little bit of informed decision making that goes into a manager's profile, and that's what you are here to learn. So the BGP program builds you for those decisions, and hopefully they are well thought of decisions. They are very considerate decisions. They are based on information, sometimes also based on experience and logic and intuitiveness. There's nothing wrong with that, but it needs to be a well considered discussion. So what you could look forward in this session is that I will talk about how data, which is quantitative information and qualitative information, contributes towards decision making. So this session will have takeaways for finance enthusiasts, for marketing enthusiasts, HR, IT, because we all deal with the data and qualitative information both, and we choose the best possible option amongst the ones that is available to us. Right. So welcome once again, everybody. Thanks for joining in on a Friday evening and spending this time with me. Um, I am Dr. Ashish Verma, and
That
I, I've been with IMT for 16 plus years now. I had a wonderful journey with my students. It's a fantastic feeling to be with a fresh batch of students every year, because I also teach you, along with my colleagues, accounting in term one, and managerial accounting in term two, and a course on mergers, acquisitions, and corporate restructuring in term three. So, and if you want to know more about me, you can always look at this IMT website, and I'm always able to answer any queries on email. My email ID is also there on the IMT website. Okay. So, well, when you say decision making is important because most businesses have to take a decision which satisfies the requirements of different categories of stakeholders, right? So let me give you a simple example. um, some of you might have already started embarking upon some readings in or maybe a little bit of business literature, and you may have just out of sheer curiosity learned about some companies. So let's take a simple company to start with. HUL is a good company. We've used its soaps and shampoos and toothpastes, and had an ice cream or a cup of tea, those kind of what we call as moving consumer goods. They move quite fast. They they are consumed, and they go off the shelf fast, and they have a shorter life cycle in all aspects. Now, for HUL, or for any stakeholder of HUL, that would include employees of HUL, vendors of HUL, lenders, borrowers, government, society. Everybody would like to know how this company is doing, and so you would, as a stakeholder, be affected by how a company like HUL performs. So HUL has this informational requirement, not only for its own self, so that it can focus on the best selling soap or best performing shampoo, but it also has to ensure that, very important, that it doesn't lead to any climate or ecological, or or any harm in terms of um, uh, uh, suboptimal labor practices, and so on and so forth. So HUL is committed for many stakeholders, and those stakeholders would need information, right? So it's a pretty interesting thing, because what you might require as a shareholder might be a little different from what I might want to uh, scrutinize HUL for as a as a climate activist. So I want to check whether they have sustainable practices, whether the environment and the gender or the equality themes which they claim are actually being done in letter and spirit, and that's what information perspective is. Now, it's also true that decisions have impact on many stakeholders, in short run, long run, in terms of money, in terms of non-monetary aspects, and so when you are looking at um, decision making, the thing is, decision making is easy. It's living the decision that's actually different. That's actually difficult. um, so when you're looking at the consequences of those decisions, um, then that's when you really realize what positives and what shortcomings of those decisions have been. And so is there a method to it? Is there a way in which decisions could be taken better, right? And for that, the first thing would be to acknowledge the fact, and to be mindful of the fact that decisions have an impact on many stakeholders, right? um, for instance, if you are a uh, if you are a RIL, which happens to be the largest company of our largest listed in terms of market capitalization company of our country, um, somewhere around, I would say, 17-18 lakh crores in terms of market cap. Well, your your choices have an impact on a ton of on a whole host of people, on different things: your employees, your your customers, your lenders and vendors, and so on and so forth, right? So that's the that's the canvas, that's the larger landscape that we are really looking at. Now, some people might say that, when you're looking at decisions, there are certain things that managers control, and there are certain things that managers do not control, right? So for instance, you might say that the price is set by the market. So why would I be bothered with finding out the cost of the product, right? The selling price is fixed. That's what the market says, and the only choice I possibly have is whether to produce or not. The selling price is fixed. So let me talk about this with a simple illustrative example, right? And the example that I've given to you on your screens here is about the computer hardware industry, and you could very easily contrast it with the healthcare industry. Hmm. Now see how different the nature of the business is. Every time there is some kind of technological improvement, over a period of time it trickles down towards a better product for the customer at a lower cost, right? So I have a few names on my screen, so let me just take a few. Let's say Adya and Akansha happen to have purchased a pen drive, say 2, 3, 4 years ago. And so the kind of GB that they would get for that amount of money earlier, well, today they can get a lot more. Okay, can you just put yourself on mute, Akansha? I think your mic is switched on. All right, thanks. So so the kind of product you can get today is much superior to the one that you could have bought 4 years, 5 years ago. So there's a technological improvement, and that means a better product at the same price, and that benefit has trickled down to the end consumer. Contrast this with the healthcare industry, where every time you have a technological improvement, um, well, it means more cost for the end consumer. Every time you have a better test, every time you have a better equipment, it means that the final consumer, the net recipient of that research advancement has to shell out more. So the nature of the industry is also a little different. So it 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 transcends the relevance of cost data, the relevance of informed decision making transcends industries, right? And it transcends functional roles. It doesn't really matter whether you're a finance specialist or a marketing enthusiast. Well, i- i- in terms of marketing, this interesting concept of target costing, well, it's actually target pricing, because you fix the selling price first, and then you work your way backwards and say, how do I produce it at this cost so that when I sell it at that price, I end up making money still, right? So, in simple English, what's the moral of the story? Well, cost data matters for everybody, right? No matter whether you are a large player or small player, whichever industry you might want to look at, hospitality or IT, it is important to collect information, whether it's quantitative or qualitative, and use that for decision making, right? It has to be an informed call, and the controllability aspect uh, is best looked at with the lens that even if you don't control the selling price, you can still take a call on how much to produce and how much to sell in that given fixed price situation, right? So I hope you are following this, and please feel free to jot down points, because by by the fag end of my session, I'll give you a chance to unmute yourself and ask me any question or clarification that you might have. And also, I would encourage you to jot down these points. Of course, they are quite extensive, and the aim is just to get you curious and look at this process from a more comprehensive lens, so to say. Okay, so informed decision making requires quantitative information and qualitative information, right? And also, there's a skill nowadays that you have to separate the information from noise. Right now, this is a really interesting point. let me ask you this: when you took a call to join a college for your bachelor's degree, or even in your MBA, you had information, but majority of that was qualitative information, right? So you did not, most likely did not know any professor of IMT or anything, but you did know about the wonderful work that our alumni is doing, and the kind of placements we have, and the kind of network that we have, and the good quality teaching. So all that is qualitative, right? You didn't know the numbers, or maybe not with that clarity, most likely. So what I'm saying is qualitative information is as valuable and as relevant in decision making as quantitative information. So those of you who have some kind of a background, let's say a BCom or a CA or whatever, um, you would perhaps have heard of something called a balance sheet, or a statement of P&L, profit and loss. And those are numbers. Those are numbers based on certain processes. And those numbers are trusted by different parties. But at the same time, the point I'm making is, in addition to those trusted numbers, audited numbers, you also have a lot of qualitative information, which is a significant part for informed decision making, right? So when you pick up your favorite company's annual report, it gives you the balance sheet, statement of P&L, all those all those things that you will learn in your term 1, term 2. Plus, it also tells you some really important other themes, like on sustainability. It's compulsory now. Top 1,000 companies mandatory requirement is to submit an integrated report, right? So, what is integration then? Well, you have now to integrate the sustainability into your financials as well, right? So it's pretty clear, but you still need to be mindful that information, even if it is qualitative, it's of great significance. And the other important aspect that you need to look at is the element of information which has a connotation with noise. Now, noise would be anything that is without any value, right? So when you are looking at information, um, is it authentic? Has it been vetted by some process? Is it an opinion? Now, let me give you an example for this, right? Most of the action that happens in the future. So if you are a marketing enthusiast, or a sales enthusiast, you know the importance of a forecast, whether these monsoons, the expected monsoons this year, whether they'll be okay, or whether you'll have a shortfall in monsoon. Though that's based on a forecast. And so you are dealing with a variable which is yet to happen, which is based on probabilities, which is based on a ton of data which has been filtered, and so you get a number to deal with. And anybody who's been into sales would know the importance of a sales budget, right? So the sales budget has its starting point with the kind of numbers that are coming from the field, the opinions that are coming from the sales force, the market research agencies which are claiming certain things, maybe from a competitor's move. All those is information, and so you as a manager need to see what would be the impact of this year's monsoons on your sales, on your product launches, on your quarterly profits, so to say, right? And so you would have a lot of information, but to segregate the relevant from the non-relevant one is again important for you for your informed decision, right? And and this comes with a little bit of training which you have all signed up for when you enrolled for your PGP at IMT, and it also comes from experience, right? It comes from being a from being a good student of what all has happened, and how do you contextualize it in the evolving scenario, right? So I have touched upon this a little bit, but I'll kind of um, again speak this. So you look at actual data, which is finite, certain, and you also look at forecasted data, which is based on assumptions, estimations, forecasts, and so on and so forth. And you deal with data which has not just financial implications, you also deal with a lot of cost data, right? So you use a number of costing concepts and techniques. For instance, if you are a marketing enthusiast, then you would want to ensure that the product that you are coming up with, uh, your your design team, your engineers, or your product development team has looked at the cost in terms of um, what the offering would be for the end consumer, right? And so cost techniques would be relevant for you. Cost is of significance for you. um, Let me give you a simple example, right? um, when you are looking at cost, the general understanding would be that you have to reduce cost in order to make profit. That's the larger understanding, and it makes sense. Obviously, you can safely presume that majority of the markets happen to be price sensitive, and so there is elasticity of demand in terms of a change in price on what the consumer would want. More often than not, that would happen. um, Absolutely. But but let's take this conversation a little forward, right? Let's say you were buying a, let's say, a study table for yourself, and you have a particular budget in mind. You're a student, and so you say, I can't spend a ton of money. I just need a one that's functional, and so I'll spend 2000 rupees. I'll buy one for my use. And when you go shopping, you realize that the retailer has one which has a nice light on top of it so that you can study. You don't need a lamp. It has a nice place for you to keep a book or a notepad or a pen or something. So it's a more user friendly offering, but it's also now costing 2200. And so you do this calculation, this mental calculation, that look, I had a certain amount of money in mind for a certain product, but this is one that gives me more value for for what I'm spending. So I'm spending 200 more, but the value in terms of what I get may be a lot more with all the amenities that that particular study table might offer to you, right? um, and there are industries which have always known this. There are industries which have always considered consumers to be value conscious and not just cost conscious. Of course, cost definitely matters, but you are looking at the entire proposition, right? So here I would like to leave you with a simple question, that why you have these courses as core courses: financial accounting and managerial accounting and so on. Forget the accounting part, forget the numbers part. The reason they exist is because they make you wiser in terms of a skill set which is so transferable across profiles that it becomes a necessity, right? You need to be aware of these numbers so that when you're sitting in a team taking a decision, you can argue with data. You can be more convincing because you've done the calculation and you know what the likely impact of that particular course of action would be, right? And at this stage, let me also just give you a little bit of glimpse as to what to expect. When you study financial accounting, we largely talk about we are almost in every session talking about joint stock companies, large companies, top companies of the country as a reference point. And of course, uh, you would look at how they report, what are the best practices. And so we talk about mandatory reporting as per Ind AS, which is the Indian generally accepted accounting principles. And what we are looking at is how to prepare a balance sheet, how to prepare a statement of P&L. How do you say whether a company is doing well or not well? How do you take a call whether you want to invest your money and buy shares of that company? It's not in totality, but well, accounting numbers are the starting point, and so on and so forth. So that's financial accounting largely. And when you are looking at management accounting, you are looking at the behind the scene numbers. So what are you really looking at? Well, if financial accounting taught you how to find out whether Maruti is making money, MSIL, Maruti Suzuki India Limited, is making money or not, is it profitable or not? Well, management accounting would tell you, um, on a more departmental level, on a more granular level, um, what the cost of a particular offering is, and also to look at the viability of a particular product or a particular department. um, so management accounting would help you plan better, control better, and do performance evaluation better, right? These are the three pillars of managerial accounting. How do you plan? For that you need forecasting and budgeting and all those things. How do you control? For control you have different tools, techniques, variance analysis, and so on and so forth. And for performance evaluation, you have different metrics, you have different yardsticks, ratios, and so on and so forth, right? So that's what you do when you are looking um, at these two courses. And of course, the central theme that runs across is how do you look at data in accounting. Of course, it would be largely quantitative financial data or cost data, and reach a good quality decision. So when you're looking at planning, control, performance evaluation, you look at financial data, cost data, quantitative data, qualitative data, and a lot of interdisciplinary techniques for decision making, right? Let me give you a couple of examples, and let me just get you give you a peek into why these concepts are so relevant, right? Now, if let's take a simple product. Let's talk about a pen, right? We all use a pen, and so you know that typically a pen would require the refill, the ink, and the body or the casing in which you would put this, and it would work. Fair enough. So I want to know, if I want to make just one more pen, would I need more refill? Yes. Would I need more ink? Yes, of course. And I would need maybe the body, the spring, or the cap, and so on and so forth. So those typically would be all relevant costs, variable costs for making one more pen. I cannot have another pen unless I invest into all these things that go into making of another pen, right? So it's pretty simple. But let's say, um, Let me pick up some more names. Let's say Ankit or Anshika has with them um, a really nice song in a pen drive, or maybe a very interesting documentary on a business tycoon, or a nice clipping, and a friend of theirs wants to get a copy. So all you need to do is share your, and let's say it's not something which is copyright protected, so it can be easily shared for private circulation at least. And so all the friend has to do is bring a pen drive, make a copy, and that is it. So there is no marginal cost involved of making another copy. So while in the case of pen you had different inputs which had to be present, here you have a nice interesting intellectual product, a song, or a or a nice clipping, that a motivational clip for that purpose, or anything, a business small clip, which is of so much of knowledge relevance for me, but I don't have to pay, I don't have to incur a lot of cost because it is freely available. Of course you might argue, sir, there's a need for pen drive. Of course there's a need for pen drive, but the pen drive would pay for itself over a number of those transactions. And similarly you have examples of solar panels which would which would help you generate electricity. So we are in a very interesting world, so to say, right? And different industries, different categories of products are way similar and way dissimilar at the same time. Hmm? You have now what could be a very, I think what you might call a zero marginal cost in certain products. Not for all, but maybe in some that might happen, right? So looking at decision making, you would have to look at all kind of data, and and whether that's qualitative, quantitative, whether that's actual or predicted, whether it's of this discipline or of another discipline. Probability is not of accounting origin, but accountants use a lot of probability for estimations and for forecasting. And so the disciplines that you study are also to a large extent interrelated, right? So cost specifically, right? I'm just building on a little bit more of basics, and then of course I'll open it up for your questions, and I'm keeping some time for that. And feel free to ask me whatever you have in mind. And before I forget, I would also recommend to you that whichever is your favorite company nowadays, everything is on the website. Just click on it, read whatever you can understand. Use your time wisely, of course, till the time you are physically with us on the campus. I think this is a nice investment of effort, right? Just click on the company's website, know what it makes, how it functions, what kind of background that it has. Go to the investors or the financials, download a copy of the annual report. Don't get scared. It'll have a lot of pages and a lot of fonts and nice pictures, but that's okay. All you need is a one-page balance sheet, a one-page statement of P&L. A, a number of things will not make sense at all, but that's okay. That's fine. No problem. That's what we are here for. But if you do these things that will that will kind of put in motion a learning process, right? And then once you start reading this, it's all start making sense. Every year this is the same thing. When you say, okay, if I'm looking at a company, what would I logically ask? And the first thing you would like to know is, well, whether that company makes money or not. And how do you make money? How do you become profitable? Well, you need to earn a little bit above your cost, and that is something, that delta is what we call as profit. And how do you find profit? Sales, whatever is your revenue, whatever is your top line. minus whatever is your cost, right? And so you would find out what the profit for that particular company is, and that's a very basic question to start with. So when we're talking about costs are for certain specific purpose. It is based in money terms, and of course, you might also incur certain costs in creation of capacity, and those capitalized expenses are what we call as assets, right? So all the things that you see, um, machinery, land, property, plant, and equipment, they all qualify to be called as assets. Okay, cost. I think I've touched upon this, but since I have it here, costs are for all purposes. If you are a service based firm, IT companies, well, they would be delivering a particular service. You now have very interesting times. You have software as a service and cloud based applications. You don't even have to buy the entire thing. You use whatever you have to, and you pay depending upon how much you've used. So costing has also evolved to keep these new business models and practices in mind. Earlier it was pretty simple. You had a manufacturing company, generally a single product firm in a single location, and so life was easy. And now you have multi-product firms, multi-locational, multilingual, multi-currency, different legal and economic frameworks in which they operate, and so things have become interesting. And and the basics have remained the same. You still would like to find out the cost of a product, or offering a service, or performing an activity, or serving a customer. Those are timeless um, endeavors that we try to make. Okay, now, um, typically this is a very interesting question. Most of my students um, uh, would typically look at service-based firms, so consulting firms, IT firms, marketing, advertising, sales, banks, insurance, and so on and so forth. They're all services firms, right? And then you also have certain manufacturing or traditional companies, so like Mahindra and Mahindra, very popular, and so on and so forth. So both these categories of companies are quite significant. But the thing is that when you look at their cost structure, they are very different. Typically, for a bank, you would not have much of material cost, but for a Mahindra and Mahindra, you would have material cost. For a bank, you might have a lot more overheads. For an advertising firm, you might have a lot more overheads, and so on and so forth. So the cost structure also is different. And the imperatives of this is that you need to be clear that you have to first identify the right costs. And when I say right, what do I mean? I mean quantitatively capture it, qualitatively capture it, um, and at the same time, realize that you have to use the right tools. So, to distribute manufacturing cost, it's pretty easy, because when you look at your cell phone, you know exactly what all went into it. You know the screen, you know the speaker, the camera, and the stuff like that, and that's very traceable to your cell phone. But the same cell phone, maybe it's a Samsung or whatever, you when you look at it, you can't really identify the contribution of the person who sat at the reception of that plant, or of the um, of the money that was spent on rent or insurance, or on any other indirect activity. Those are all clubbed together and called as overheads, right? So for services firms, overheads and even labor is more significant and large in proportion in comparison to in comparison to manufacturing firms, which would have a larger portion as in the category of materials in their pie diagram, right? In their cost pie structure, you would have a larger shaded area for manufacturing firms. That would be material cost, and then of course labor, and then maybe some part of overheads. Okay. A few more points, and then I'll kind of open it up before we run out of time. Very, very interesting things. Again, when you're looking at decision making, when you're looking at informed decision making, the stage and the life cycle of the company and of the product comes into play. And so, the simplest example that I could give you could be of Coca-Cola, and it's been around for such a long time. We've all maybe at least some time consumed Coca-Cola or any other soft drink. And my question would be, where is it in its life cycle? Is it in the introduction phase, maturity? If it is in the maturity, when can I expect a decline, and so on and so forth? And so product life cycle or company life cycle also affects the kind of the kind of decision making that happens. And this again would require information of accounting origin, of quantitative nature, of qualitative nature, and collectively it will inform the company what to do next, right? Okay, I've talked about this, and I think I gave the example of a multimedia clip or a file or a photo. And this entire thing is again very interesting, because when you're looking at costs, the first thing that comes to my mind is what is relevant and what is not relevant, right? Not everything that has been spent is relevant for decision making. And the example that you can look at is that those costs which you can influence in future, or which are changeable by managerial action, are the relevant cost, right? Otherwise it's all a sunk cost, it's all water under the bridge. It would not matter, right? So these things are used in situations when you do profitability planning, or you have a make or buy decision, and so on and so forth. The first thing that you need to consider is whether a particular cost, or even for that purpose of whether a particular revenue is relevant or not, right? So it is an important criteria um, for informed decision making. Okay, so I think I've talked about this. I've talked about the three pillars: planning, control, and performance evaluation. Um, and more would come in the terms that you would study. Of course it's a 1 hour session, so I've kind of kept it at a very elementary level. You would have a ton of questions, I believe, if you've heard me. If you've not, if you've not logged in and be somewhere else, but you would benefit from this in budgeting. Strategic planning is a very very popular MBA profile, and so on. Okay, I think that would be what I had hoped for, and I think I'm pretty much on time. I have about some time for your question and answer. I would love to answer your questions now. Um, how do we do it? Do you guys unmute yourself and ask directly, or do I first stop sharing?
Sir, they can't unmute themselves because being as a host, you have mute them all. That's why.
All right. Thanks, CSC. Let me stop sharing first. Okay. Um, so how do I unmute people and then they can ask? Okay, from chat box. Okay, I can answer from chat box in
That could do.
Okay, perfect. That makes more sense. Okay, so let me just keep on writing your questions, and I'll try to be as quick and as productive as possible for you. Thanks everybody once again for being with me today. Um, okay, okay, Ansh, the advancement in healthcare, Ansh, it's simple. If you come out with a new test, a new diagnosis, it's going to be pretty expensive because all the R&D cost is going to be function of the cost of the offering, and it's going to get recovered quickly, because if you wait too long, somebody else comes up with a better test, a better diagnosis, and so the payback has to be short enough so that it is recovered, right? I hope that helps. The material used is of better quality, requires much sophisticated manufacturing. Rituraj, if you could just type that again, what that means. Same with tech industry. Anjit, we used to have 9 chips 6 years ago, flagship phone. Now we have got 5 nm chips even for mild range. And that's a good example. Um, I'm very bullish on semiconductors, Anjit. I generally ask students, and I think there's some action there. But it's a super important input for everything nowadays, right? From electronic vehicles to everything else. Um, how can we decipher what's happening, Abhilash? Well, you need to first capture the right information, and there's again a process of looking at what is the decision at hand. First, identify what needs to be decided, and then see what all relevant facts you have, what all analogs you have, what all antilogs you have. You may have to make a decent hypothesis, and sometimes there's also a little bit of leap of faith, right? So don't just rely on a leap of faith. Do your analysis first, but don't spend too much time in analysis that the decision is lost or you are too scared then to take a decision. That's the point. There are many information which comes from the right source, which turns out to be noise. Is it possible to make a difference between noise when such a thing happens? All right, Abhinav, please mute yourself. Okay, Abhinav. Thanks. Yeah, Karan, that's a good point. Companies generally would not like to confuse you with noise. It's counterproductive, but sometimes what you consider as noise might be relevant for another stakeholder. That's a point that you need to consider. Second, not every information is relevant at one point in time, right? So what is of relevance for a startup for a small cap firm might be very of much of insignificance to a firm which is largely mature and stable and now um, which has been there and done that, so to say, right? But that's a good point that you have. um, Sir, management accounting input information is collected from internal management, not available. Absolutely, Shivansh. That's very true. Cost data is generally not put in public domain. Management accounting, a simple example I could give you, if you're doing a performance evaluation of Maruti Suzuki India Limited, that's financial accounting. You can pick up an annual report, do everything that you would want to. But let's say you are curious whether Swift Desire makes more money, or whether Ciaz makes more money, or whether Brezza makes more money. That's what management accounting is. So you are now looking at a profitability planning or a profitability analysis of a subcategory or a sub or a product which is a Brezza or a Ciaz or something, and not for the entire company. Is it of relevance to the company? Absolutely. Company would like to focus its attention, time, resources on products and categories which make more sense for the company and its shareholders and others. Gagandeep, cost and management accounting. Cost accounting is pretty specific. It's just to do with cost. Management accounting is larger. It's broader in scope. It looks at things much beyond cost accounting. But managerial accounting happens to be of great significance, right? And it 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 is something that everybody does without realizing. You sometimes have a different mindset approaching this because you think that it's accounting, but at the end of the day it's just decision making with data, right? Okay. Coca-Cola phase will vary. Yes, Manish, what does relevant is something that you can impact or you can influence. Irrelevant is something that you cannot do anything about it. For instance, Ruturaj, um, if you needed some tuitions for a particular subject while you were a student at school, that's sunk cost. That's irrelevant. It won't matter now if you have to decide whether you want to join company A or company B, right, as a part of the placement process. So that's how much you spend at that point in time doesn't make any difference now. Okay. Sonal, this is a long question, but future career prospects for finance after PGDM are great. You should talk to my students. They will give you more answers, and feel free to interact with them when you are on campus. They know more than me. But of course, it is a very popular program, and you have. I mean, my old students are doing very well. I think that's all I can give you. Different banks, insurance companies, consulting firms, all kind of places. Culture of critical evaluation based on questioning of biases, assumptions, limitations inherent. Satanand, if I'm pronouncing your name correctly, and limitations inherent in quantitative analysis and inclusive of adoption of interdisciplinary tools like you mentioned, fostering a more decision making environment. Absolutely, Satanand, that's a very good point, I would say. Thanks for asking that. Well, the first thing I would say, if you really want to look at um, a very robust system, is to have a leadership in place that encourages questioning and debating and discussion, and not taking everything as cast in stone. That's number one, because that's when you can critique your own um, tacit assumptions. You can challenge something that you took for granted. And I'm sure you guys have watched. I'm just giving you simple things so that you can all relate to. But when you're looking at disruptions, and when you watch Shark Tank, and when you watch all those things, what you're seeing is people looking at the same problem or the same way things have been done, and saying, look, I have a better option on this, I have a better way to do this, I can solve something, no matter what that would be. And so effectively what you are doing is you are questioning the tacit assumptions and the way things have been done, and so on and so forth. But yes, when you are doing that, you better have done your homework well, and you better have done all the calculations and the scenario buildings and the estimations and the what if calculations. And that's what your question is all about. So thanks for asking that, Satan, and that's a great point. Okay, Aman, fixed cost is, of course, well, it's historical. And I'll talk a little bit more about this. It would require a detail, but yes, if you're setting up a new plant, of course, it would matter, Um, Ankush, advanced quantitative finance would be a little bit out of the scope of this session, but it would require, well, things. If you have a quantitative background, finance definitely would be a natural extension. You would have certain courses in which you would do well if you have a quantitative background, but you don't need extensive for finance. You don't need too much of grooming in that, so to say. As long as you're good with basics, that would be good. Gaurav, I thanks for saying about that semiconductor. Thanks, Gaurav. How small, medium firms, larger firms, assuming that they are in the same. Oh, Sumit, every firm would do costing. Forget small firms. Even the retailer who sits across the road next to a housing apartment, or a small sole proprietor, they would do cost analysis, right? And maybe their cost structures are different, and so for a small retailer you do not have too much of fixed cost, but your favorite mall in the city that you have has huge infrastructure cost, and so was badly hit during the COVID pandemic because there was not much of footfall, and all the grand infrastructure that was created was of not much use at that point in time, right? Burnashri, depreciation, amortization, you'll just just keep that on hold. I'll talk about that in term one, or um, you can Google that also, and you can have an answer. But both are basically when you consume an asset, right? And the gradual wear and tear and fall in value, and that's what depreciation is. And amortization also I can talk. Materials, Ruturaj. Okay, I've talked about this. Overhead thing. Okay, Lalit, overheads are basically indirect expenses. Anything. Simple example. I'm wearing a shirt right now, and when you do costing for this shirt, you can say, "Sir, this shirt required this much amount of cloth, so many buttons, thread. Master G had to stitch it, and so this is the cost for the shirt." Absolutely fine, given. All those are variable cost, direct cost. But when this shirt was stitched, it was not stitched under a tree. There was a particular location, and of course that location, maybe it was rented. If it was rented, rent was paid. And they, maybe the guy sat at the factory gate, and this guy was a watch watchman or somebody to ensure that factory is safe enough. And so the guy had to be paid. And there was some electricity bill that happened, there was some water bill that happened, some you see this, there's a whole host of indirect expenses that happen. And those indirect expenses are also to be recovered by the company by selling these shirts. The company won't bear those expenses on itself. You see this? Now the point is, how much of those overheads have to be charged from this shirt, and how much from some other category of shirts, right? So you see, this is not too easy. The other example could be if LG makes refrigerators, washing machines, television sets, and it has certain common expenses like corporate headquarter cost, or a common LG advertisement. How much of that expense needs to be charged to refrigerators and televisions, and whichever category that they are into? Okay, I am speaking as fast as I can. I'll need two tea, and Professor Harvinder will probably uh, offer those these to me. Um, Throat runs dry, but let me just see if I can answer some more. Um, Siddhant, I don't know if I understand your question correctly, but you are talking in terms of price range and price movements, and how could that affect the profitability planning. Yeah, the thing is that companies do look at price as a as a as a means to manage their their profitability, but it's not as rampant as this. They first increase and then decrease and then increase, and so that would not be acceptable, right? So let me give you a simple example. You may like Britannia, and Britannia makes these nice cakes and cookies and biscuits, and the price of um, flour and salt and other imports, whichever dry fruit or whatever they put into those cakes and cookies, keeps on fluctuating. Those are commodities. But the price of the Britannia pack remains pretty static and constant. So it doesn't change every month, every 2 months. It is pretty much the same. So they have done a little bit of um, input cost volatility management, so to say. Right. Yes, Akash, you are right. Uh, Cost data is maintained. Those are cost accounting record rules. Law requires it. Management accounting. You are right, Uttama. Decision making would be depending on the company, but what I'm answering is in terms of cost records, right? So I can tell you this for sure because I'm a professionally qualified cost accountant, and there is something called cost accounting record rules and cost audit. So it is compulsory. Um, okay. All right, guys. I will run out of time eventually. So okay. Okay. Let me pause here, right? Let me just speak a couple of points before we close this. Guys, the first thing is once again, I would want to thank each and every one of you. Thanks for patiently listening and for asking all these questions. I'll not be able to kind of complete this, but if you can email these to me, then it's definitely easy for me to address them. Or if you just start embark that journey, and keep on looking for it, the answers would happen. um, the other thing I would want you to do is to maintain a diary. I'm giving you some of the best practices which students in the past have done. And one important point would be not to have any preconceived ideas that I am not from finance background or commerce background, and so why will I be able to do this. Please, that I've heard that argument so many times. Let me tell you, it doesn't hold true. Right, as long as you are curious and as long as you put in a little bit of effort, um, the rest I can only say that you are in very safe hands. Right, it's our job to ensure that you have great learnings and you have fun in that process, and you don't learn for the for just examinations. You understand certain things, and so you would you would benefit from maintaining a diary, writing down terms that you don't understand, finding the meaning of that, looking at different phenomena that you see, read a business newspaper, watch business news. All those small things are something that you can do right now. Those would help. And of course, whatever uh, whatever uh, time you have, I don't know, some of you might be still working, some of you might be with other prior engagements, and so this is just a little bit uh, you know brief introductory session for you to know what to expect in these courses. Of course, those courses are very much in greater detail. You have a lot of input going into it. And so uh, I hope this session has given you something to look forward to in terms of numbers, data, business scenarios, industry connotations, and so on and so forth. Okay, so I think we've run out of time now. I would close this session now. Thank you, each and every one of you. Thanks for being with me. Thanks also to CSC for this fantastic coordination. Thanks to Professor Harvinder for giving me this opportunity. And I'm looking forward to seeing all of you on campus pretty much soon. Right. So thanks everybody. Bye bye. Have a
Thank you so
great
much, sir.
weekend.
Thank you, sir. Thank you.
All right. Bye bye.
Recording stopped.